Hello, this is Matt on the Moon Lambo channel. And XRP family, what I'm about to say, I say with love. Don't mess up your chance for life-changing wealth investing in the world of crypto, and specifically with XRP. Just don't mess it up. And I'll explain what I mean by that. In fact, there's an article, and I actually just pulled this up just kind of bring home a point, because there's an individual who happens to be very pro-XRP, who says, he shares the sentiment in a more colorful way. You can see the headline right here, and I'll just, in case you got children's, it's in the background, I'll just, censor it a little bit. Don't F this up. Expert issues stirred warning to investors. And they're talking about Raoul Pal. And I like it when he says it. It just kind of makes me laugh. He's so blunt about it, but it's the same sentiment that I share. And it's too crucial. And so to not have exposure to the asset class, or to be making poor decisions by getting emotional or getting in and out of positions, just the FOMOing and the panic selling, all that stuff. It's just, like, don't mess it up. Don't do this to yourself. You get to control this. And it's just the case that when it comes to investing, each of you out there listening, you are your own worst enemy, right? And maybe you're better at handling your emotions than the typical lemming retail speculator out there. And if so, bravo, good for you. But we've all felt fearful about markets before. I mean, they don't hit me at all anymore, but I have felt that way, way, way long ago. So I know what it's like. But we are our own worst enemy. And either we figure this out or we don't. And so I'm going to share with you some perspective that I've really, over the 5+ years I've been running this YouTube channel, I've only brought it up maybe a few times, but I want to mention something very specific right now, because we're at a crucial moment. We are at a moment where we're going into, in all likelihood, the euphoria stage of this market cycle. And it's not a guarantee, but I mean, the most respected analysts out there that I follow anyway, they're like, yeah, we're going to have probably a lot of fun for the next, 4, 5, 6 months at least, if not longer. And so if this is true, and it's true that we're getting out of the accumulation zone for altcoins, including XRP, we're going to see some fireworks, son. And that's why I want to share with you something very particular in this latest Moon Lambo Hot Jam. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice. And you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. All right, so here's something I want to share, and I have brought this up, whether it's 2 or 3 other times on the channel over the years. I should probably bring this up more. I mean, maybe I've said it more than that, like in passing. I'm sure I have, but I haven't dedicated like too many standalone videos to this. And I want to bring this point home right now, because it is the case that if you invest and you don't tinker with what you invest in and you just let stuff play out, I mean, unless you're in some true garbage, the odds are, if you just have broad exposure to the asset class, the crypto asset class, that's probably going to play out way better for the typical person than getting in and out of positions. Because either you have exposure to the market and certain individual assets when they do start running, or you don't. And if you don't have exposure and you see something pop and then you start trading it, it will result in, if not losses, then much smaller gains than you otherwise would have had. And so this concept is true in crypto, and it's true in equities, in the world of stocks here. And so there is this, presentation put together by some random firm. I've actually highlighted this exact one before. But it's just something that I randomly found doing some searches on the internet. And what it shows here is the S&P 500 index, and from a time span of the end of 2007 through the end of 2022. And stick with me on this, because again, what I'm sharing with you in the concept, yes, fine, they're talking about the S&P 500. We're talking about investing in a traditional manner. We're talking about stocks. But the concept is true in crypto. 100, and it's more consequential in crypto. I'm just using this as a way to get this idea across, and it's true of XRP. That's why when XRP starts running, either you'll have exposure and you'll be very happy, or you won't have exposure. And so they wrote here at the top, time, not timing, is the best way to capitalize on stock market gains. By trying to predict the best time to buy and sell, you may miss the market's biggest gains. And they wrote here, the U.S. stock market has been resilient throughout its history. Stocks routinely recovered from short-term crises crisis events to move higher over longer time periods. And so, folks, this is what they're citing here. It's the same thing I apply to crypto, and it's hopefully most of you are aware of this by now. It's just that there are always new people jumping in here, but that's why when we're in bear markets, that's where the true opportunity is. That's where you arm yourself, and that's that when things go into bull market mode, you can unload what you've armed yourself with. Meaning, whatever you bought cheap, you can now sell at a much higher price here. And so they note, this would be. Oh, they're talking about September 2008. They note here in the chart, for those of you that are looking, you can see what I'm talking about here. This is, it was a disastrous event, yet we lived through it. They wrote, the collapse of Lehman Brothers in September 2008 triggered a severe market downturn and recession. Within a year, stocks had recovered significantly. Now, folks, I lived through this, and I know all of you did too if you're listening in 2023, but I was an adult at the time that this happened. And it was just utter catastrophe. People panicked. Can you imagine selling other? Because the psychology of people is everything had gone down so much. It's so painful. Their net worth is going down so substantially. And I'm sympathetic to that. So what did they do to stop the bleeding? They just sold their stuff off after a dramatic drop. But then once the market recovered, they were out and they just ruined their retirements. That's disastrous. Because you can see what happened. That was I remember how bad that was back then. I remember how scared people were. And look at how the market rallied, the S&P 500 specifically here, over the next 15 years roughly. It's crazy. And here's another point they pulled out. They wrote, the market declined sharply in 2011 when Standard & Poor's downgraded the U.S. credit rating, but rallied soon after. And see, it doesn't even look like that big a fall here, but that was another terrifying moment. And price went down, and what did the lemmings do? Well, I'm scared too, so I'm going to give you my stuff that I own, my retirement on the cheap. Here, just take it. All the years I worked on this stuff, you just have it on the cheap because I'm afraid it'll go lower. And then what happened? It just keeps ripping to the upside. Which is why when it comes to investing, including with XRP, I believe the best position is to have a long-term outlook. If you actually believe in the fundamentals and you think eventually that's going to matter in the future even more than it does today, and you don't need the money you've invested right this second, what are you afraid of? That's why I've never been afraid of a bear market. I don't even need the money I've invested in it. Technically, if I lost it all, I'd be sad about it for sure. But I have separate retirements outside of this in case I'm wrong about all my crypto adventures here, which is possible. But I sleep easy because I don't need that money out now anyway. And I do believe it's going to be worth way more in the future. But since I don't need it now and I do have income streams, what the hell does it matter? And people just have such a hard time acknowledging that and then letting that knowledge result in them not feeling the scary feels. And here's another one. In June 2016, U.S. stock prices dropped more than 5% in 2 days after the Brexit referendum, followed by a dramatic 3-day recovery. Now, it's funny because 5%, that's like less than a minute sometimes in crypto. So that's like 5%. But when you're talking about more traditional investments, 5% in that time period, that's pure chaos. That's blood in the streets, right? And then they have another one. The S&P 500 tumbled more than 10% on fears of a Fed policy error and a U.S.-China trade war in the fourth quarter of 2018. And that does, visually in the chart, you can see that was much more dramatic. And then the most dramatic one in recent years, this is going to be the pandemic, obviously. Here they wrote, during the weeks when COVID-19 became a global pandemic, the S&P 500 plummeted more than 20%. And folks, what did people again do? Too many people, they lost a substantial portion of their net worth. They didn't want to lose more of it, so they sold there, and then it just popped right back on up. When there's blood in the streets, that's the time to buy. But there's a broader point. That's a concept that's important. But as I was saying earlier in the video, and this is what I'm now circling back to it. I want to bring this point home. What's most important is not trying to time the market. Either you have exposure when something pops, or you don't. If XRP is going to pop in the future and run to an all-time high, I'm going to have exposure to it the whole time because I don't sell my XRP. I sit there and I hold it like the most stubborn human you could possibly imagine because I actually am. When it comes to my investments, you're not going to find a more stubborn person than me. And so here you can see they wrote at the top, here's the headline, the little banner, stay invested so you don't miss the market's best days. And this is the most important part of the video, so I'm glad you stuck around this far in. Here, they show us what your returns would have looked like if you invested $10,000 in the S&P 500 at the end of 2007. What would that $10,000 be worth 15 years later at the end of 2022? And now, again, I understand, since we're talking about traditional finance, the percentage gains are not going to sound as fanciful and exciting and enticing as crypto, and the dollar figures won't either, and it doesn't matter. The concept is what matters, and the concept applies to your XRP, to your Bitcoin, to your to everything. The concept is what applies. Because, you're buying and selling against other humans with the same DNAs. That's why you keep getting the same behaviors. It's just so exaggerated in the world of crypto because there's such a frenzy around it. And the markets are way less liquid, so it doesn't take much money coming in to get these dramatic swings. The volatility is what makes the crypto markets appealing, frankly. And so here, if you put in $10,000 at the end of 2007, then 15 years later, you would have had $35,461. So that's an annual return of 8.81%. Again, pitiful in the world of crypto, but not too shabby. 8.81%, even after all those pullbacks. I just shared with you all the disaster, all the panic selling. Because again, you're talking about putting in that $10,000 right before the Great Recession of 2008. If you put it in before that huge collapse, even considering that and all the other collapses afterwards, you'd still be up from $10,000 to $35,461. Okay, but what if you missed only, over those 15 years, what if you missed the 10 best days? Just the 10 best days. Now, folks, set aside leap year, there's 365 days in a year. That times 15, roughly, because there's leap year, obviously. But that's a lot of days, right? If you miss just the 10 best days, that $10,000, instead of being worth $35,461, that $10,000 would only be worth $16,246. You would have an annualized return of only 3.29%. That's if you just missed the 10 best days. Folks, this is why I do not get in and out of positions. Either I buy something and I'm right about it, or I'm wrong about it, and that's it. And that's why, since I've taken that approach for over 6 years, that's why I'm up so substantially. Because it's been sufficiently long for me. And I was down pretty substantially for most of the first 3 years. But then we went through another market cycle, and then the stuff that I bought in the first 3 years, that was way up. And then I've been down on much of what I bought the last 3 years. I've been down substantially until very recently, because we're only now starting to get into the true bull portion of the market cycle. So you're down for years. That's normal anyway. A lot of people like me are. But then suddenly you're not, if you hang on long enough. And then check this out. What if you miss just the best 20 days? The best performers, the best 20 days. That's not many days if you're talking, 15 years of days and you miss just 20 days. You're not missing that many days. But what if you don't have exposure? Well, you're actually down at that point. Your $10,000 has now turned into $9,748. And that's because most of what it is to invest is to have boring sideways or downward price action. Then you have these random big days that make it all worthwhile, and you're there or you're not. Period. What if you miss the 30 best days? Your $10,000, it would only be worth $6,399. That's it. You'd be down 2.93% per year if you miss the 30 best days. What if you miss the 40 best days? Your $10,000 would be worth $4,401. You'd be like, well, I was here almost the whole time. Okay, but what were you doing? Were you getting in and out of positions on key days? Your $10,000 turns into $4,401, down 5.32% annualized. See, that's crazy. That's why I don't play this game. I know people seriously have a hard time with this stuff, but this is why I don't flip out. This is why I do not get in and out of positions. I don't think I'm some sort of wizard or smart. I'm not a financial guru. I'm an idiot like everyone else. That's why I just don't do stuff. I just don't do stuff. That's why that's why people fail here. They are their own worst enemy. And why do people do stuff? Well, so frequently it's the emotions. I'm impatient, Or, stuff's going down. It's probably going to go lower. I'll just jump in and buy back lower. Well, maybe you'll be able to if you're lucky, but, you can do that right 9 times in a row. And then the 10th time, if you don't, maybe you'll lose everything and then it's no longer worth it. Maybe you're down then. Do you really want to add that exposure and that level of stress to your life? Or do you want the set it and forget it approach? That's what I do. Because that's the closest thing to being an idiot-proof approach. And that's why finally, when XRP does run and hit a new all-time high, that's why I'm going to get mine. It's because I held on this whole damn time. Through thick and thin, through the highs, through the lows in between, through everything. My average buying price for XRP is 25 bucks. I saw it as low as 10 or 11 cents. I saw it at $2 after that. After that, I saw it at 16 cents. And you go know the story. It's extremely volatile. But none of those price points are an indicator of whether my investment thesis on XRP is right or wrong. Because it hasn't gone to zero and it hasn't gone to a new all-time high. But one of those things is going to happen. And you know where I placed my bet. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.